students, good morning students. Now it's time to study accounts. See your accounts book, double entry bookkeeping. Accounting is quite interesting subject only if you put your full dedication to understand the subject with interest. So today we are going to start the first chapter of your accounts book, and the name of the chapter is Accounting, Introduction to Accounting. Points to be covered under this topic, under this chapter, note down. Number 1, Introduction. Number 2, Objectives. Number 3, Attributes of Accounting. Number 4, Meaning of Bookkeeping, Accounting and Accountancy. Difference between bookkeeping, accounting and accountancy. Functions of accounting. Accounting cycle. Is accounting an art or a science? Advantages and limitations. Branches or subfields of accounting. System of accounting. Hope you all noted the points. Okay, before starting my chapter, while doing a business, number of questions stuck in the mind of businessmen, like the questions: am I making or losing money from my business? Is a big question in the mind of businessman. Second question, how much I worth? The meaning of worth is having a particular value. Third question, should I put more money in my business or sell it or go into another business? Fourth question, how much is on to me? The meaning of on to me, bought something from other party. And how much do I owe? I owe means have to pay money to somebody. How much can I change the way I operate to make more profits? So these are the main questions in the mind of businessman, and the solution of all the question is only accounting. So first of all, see the meaning of accounting. Accounting is an information system that provides quantitative. Quantitative means measures in monetary term only, not in the term of quality. Financial information to stakeholders about the economic activities and conditions of business so that they can make business economic decisions. So before explaining this meaning of accounting, first of all, it is required to know about the main key terms. Number 1 key term, first of all, know about what is financial information. Financial information is the data about the monetary transaction of a person or business. So students, financial information when measures in monetary terms is considered as financial information. For example, like in India, we are using which currency? Rupees. So see, cost of goods sold worth rupees 2 lakh. 2 lakh here, monetary term na? So it is financial information. Purchase of machinery for rupees 1 lakh. 1 lakh is also monetary term. So both points considered as financial data, financial information. So suppose a company recorded purchase of machinery of good quality. So here good quality, it is a financial information? No, it is not a financial information because here qualitative aspect, but we are using which aspect? Quantitative, which can be measures in monetary term only. Now the next point is stakeholders. So stakeholder, a person with an interest or concern in something especially a business. Any party who takes interest in your business is considered as stakeholders. For example, creditors, employees, government, owners, suppliers. So suppliers who supplies the goods to the business, they are always interested for sale purchase. Next one, owner. Owner is the main person of the business who invested the money in the business. So he or she always ready to know about the business position, growing or not, we are earning profits or not. Government for taxation purpose, for tax liability, they are interested in the business sector. Employees always interested just because of salary, just because of good returns. And creditors, see, creditor is quite technical term. Creditors, a person or a company from whom you have borrowed money. When you borrowed money from some other party is considered as creditor. For example, you borrow money from Ram, rupees 1000. Ram is your creditor here. Now the next term is economic activity. Economic activities is an activity of providing, making, buying or selling of a commodity to people to satisfy day-to-day needs of life. For example, transportation, mining, manufacturing, banking. So economic activity is, it is very simple term. When any business, any activity conducted for profit motive only, if you want to earn profit only, considered as economic activity. Now, what is the main objective of accounting study? Why we are here? Why we are studying the accounts? The main objective of accounting are maintaining a complete systematic record of all transactions and analyzing the financial position of the business. So students, the main objective here is complete and systematic record of transaction. If you want in your business each and everything organized properly in a proper manner, so accounting is required. And for analyzing purpose, in order to understand the financial position of the company, is company growing, declining, in a good condition, not in a good condition, earning profits or not, only possible just because of the financial data, which is accounting. Every individual or business concern is interested to know the result of financial transaction. Yes, every individual, all the stakeholders are interested in the result of financial transaction, and their results are ascertained through the accounting process. So proper process, proper rules and regulations followed for this purpose. So student, again see what is the meaning of accounting. Accounting, you can now, it is quite easier for you. You know about the main terms. You can easily understand the meaning of accounting here. Accounting is an information that provides quantity which can be measured in monetary term, in numeric terms, financial information to stakeholder, interested party, about the economic activities for earning profits and condition of business so that they can make business economic decision. In simple words, accounting means when business provides the financial information to stakeholders to take decision for future. So, in all activities and organization, business or non-business which requires money and other economic resources, accounting is required to account for these activities. Where in any type of business, non-business, money involved, it means management required, accountability required. So for this purpose, accounting required. In other words, whenever money is involved, accounting is required to account for it. If money is provided to you, then you are responsible. You give the full account, full answer to your owner where you use the money. Is you are using the money in a proper way or wastage is available? So next part is accounting is often called the language of business. Yes, it is the accounting which is the business language. The basic function of any language is to serve as means of communication. So communication, if you are having financial data regarding previous year we are earning 40 lakh profits, this year we are earning 50,000 profit, 10,000, 10 lakh increase in profits. So then only you communicate with some other party for the business. If you are not having any financial data, then it is quite difficult for you. So you can communicate with some other party with the help of language in business, that is accounting. Accounting also serves as this function. Now see the history of accounting. Accounts are written since ancient time. Many evidence are available that accounts were maintained in it. Ancient China, Misr, during the age of the Mayur Samrajya, Kautilya, the Prime Minister of Chandragupta Maurya, in his book Arthashastra, has given details instruction about the maintaining the accounts. The Italian monk Luca. So student, the Italian monk Luca Pishley, for the first time in 1494, in his book Mathematics, made presentation of currently in use double entry accounting system. Thereafter, accounting has become an integral part of each fact of life. So in day-to-day life also accounting required. If your parents providing you money, then you manage it, you count it na, you used for petrol rupees 200, for your canteen expense rupees 100. So these type of management is considered as accounting. The accounts of household expenses are also maintained in many houses. Like suppose for kitchen budget is also maintained, for other household purposes budget also maintained, accounts maintained, we are using this month this much expenditure on this part. Objectives of accounting. Objectives of accounting may differ from business to business, depend upon their specific requirements. However, the following are the general objectives of accounting. What are the general objectives? Number 1, keep systematic record according to dates. You maintain the records. Ascertain the results of operation. You know about what are the results of the operation, the activity you are performing in your business, good for you or not. Ascertaining the financial position of the business. So with the help of accounting information, you know very easily what is the financial position of any business. If the financial statements showing good, huge profits, it means you know that the company is very sound and in a good condition. Portray the liquidity position. Liquidity position means how liquid the company is, easily convertible into cash, the position available or not, or company is in a debt. Next one is to protect business properties. For the protection of business property, accounting required to facilitate rational decision making. So if you want to take any decision wisely, accounting required to satisfy the requirement of the law. Yes, by law mandatory to maintain accounts properly for taxation purpose. Why is accounting required? Important. Number 1, accountability, answerability. People who handle cash in the company are responsible for it. Yes, those who are handling the cash in the business, they are responsible to give the answer to the owner. we are using this money on this purpose, we are allotting to sales department 4 lakh, we are allotted to production department 10 lakh. The person is accountable, responsible. Next one, budgeting. So accounting is also important for budgeting purpose also. This allows a business to estimate its future sales and expenses. You can estimate your sales, your expenses in your future just with the help of previous data available. Like suppose in your business, in your company, previous year your sales rupees 10 lakh. Now your target, your budget next year more na. So rupees like 12 lakh, 15 lakh. So if your sales more, ultimately your expenses also increased. So budget also maintained with the help of accounting records. If you are not having previous year data records, then it is quite difficult to know about the future projects. Taxation. Records must be kept in order to pay taxes. Yes. Every company maintain the records properly so that the company calculate the tax on income properly and file return with the income tax department. So student, if you are having proper records of expenses and income, then only it is possible for you to assess the tax liability and file the return for income tax purpose with the income tax department. So these all three are the points: accountability, budgeting and taxation. So the next point is accounting attributes. Attributes of accounting. Number 1, identification of financial transactions and events. So you can identify firstly nature of the transaction. Is it in monetary term or not? Then measuring the identified transaction. Measure in some currency, like in India we are using rupees. Third one is recording. Proper recording is required in the accounting books. Classify, categorize the information. Summarize in brief form so that everyone can understand and without any wastage of time. Analyzing and interpretation. Interpret, conclude the full report. Your company earning profits or not, sound or not. Last one is communication. Communicating. When you communicate your position with some outsider, with the stakeholders. So in detail, see your book page. Attributes of accounting. Number 1, accounting of financial transaction and events. So accounting records only those transactions which can be measured in monetary terms. So transactions that are recorded that are considered as a part of economic activity which is only for profit motive. For example, purchase of raw material. When you purchase the raw material from the supplier provides you goods and you in return provides money to the supplier. It is economic activity for profit motive. Like sale of finished goods by firm. When the firm sold the goods to the customer, so ultimately customer provide money to the firm, and it is also considered as economic activity for profit motive. Such transactions are identified with the help of bills and receipts as evidence of transaction. So with the help of bills and receipts, they all considered as a proof for recording the accounting transactions. Next point is measuring the identified transaction. Accounting measure the transactions and events in the terms of common measurement unit, that is the currency of the country. Like India, we are using rupees. In other words, financial transaction and events are measured in the monetary terms. The third point is recording. Accounting is an art of recording business transaction in the books of accounts. So number of books available, business accounting books available. Have a look. So recording, we are on the point recording. First book, journal. Original entry. First of all, you record your transaction in journal book originally. Then your journal is subdivided into some subsidiary books. Number 1, cash book, or it is also known as cash journal, purchase journal or purchase book, sale journal or sales book. So meaning of cash book: for recording cash transaction, all the cash related transaction recorded in cash book. Purchase journal, for recording credit purchase of the goods. If you purchase something on credit basis, then all the transaction recorded in purchase journal or purchase book. And for recording credit sales, anything sold by the company on credit basis recorded under sales book. So see students, these all are the main books under which you record your financial data. Next one is fourth point, classification. Classification is the process of grouping the transaction or entries of one nature at one place. So same nature item, firstly you categorize all the data, all the information mixed. Firstly categorize it, same nature at one side and different nature at other side. So the transaction recorded in the journal or subsidiary books are classified as posted to the main book of the account known as ledger. After the journal, you post your entries into ledger. This is a book has individually accounts heads under which all financial transactions of same nature are collected. For example, see, in purchases account in the ledger, transaction of purchases of goods are posted so that purchases of goods can be known. So simply when firstly original book, firstly you recorded in the journal, then after journal you maintain different separate account for each and every item, for purchases, for sale, for any person, Ram, Sham, and these accounts considered as ledger. It is simply overview of journal and ledger, otherwise later you are full-fledged in detailed chapters available. It is just overview. Summarizing. This involves presenting the classified data in manner which is understandable and useful for internal as well as external users of statements. This process leads to preparation of following statement. First of all, summarizing. When you summarize the result in brief form, it is quite helpful for the internal as well as for external user. In internal user like management, owners, employees can understand the data information very easily. External users like outsider, public, investors, any other like banks, government, so all are also interested. If you provide your data, if you provide your information in simple form, then it is possible for the outsiders, internals to understand the information. So this process leads to preparation of following statement. Homework questions. Number 1, journal questions. Search over the internet and also use your mind to give the answer of this question. Plan accordingly why you decided to become a commerce student only. Elaborate your aim in life. Number 2 question. Who is your role model in commerce field? List any 4 multinational companies in India. Do the case study of 2 very successful chartered accountants in India. Define accounting. What are the characteristics of accounting? What is creditor? What is financial information? So these all are the main important questions. Plan accordingly, and the links available. Students must refer these links also for more better understanding of the topic.